Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining and exploration space. Joining me today is David Erfle, founder of JuniorMinerJunky. David, welcome back to Kitco.
Thanks, Paul. Great to be back. Always great talking with you.
We have a great lead-off topic today. Silver pushed over $36 per ounce towards the tail end of last week, and it's touched $37 per ounce today. The big question is this silver's long anticipated breakout?
Yeah, well, it certainly appears so, Paul. I mean, the weekly close above that Maginot Line 13-year resistance at 35 bucks last week, that's a technical breakout, which so that $35 price now is becoming important support. Silver it's quietly been gaining strength as the gold price has been grabbing all the headlines by making new all-time highs on a near weekly basis since March of last year, when the gold price broke out of that huge 13-year cup and handle breakout. So and the last time silver broke 35 on a weekly basis in 2011, it took less than 6 weeks to reach its all-time high of 50 bucks. I mean, in my May 16th weekly column, I brought readers' attention to the gold-silver ratio, really important here, surging to triple digits. And that was likely the harbinger of much higher silver prices in the not too distant future, because the only other time that that this ratio got well above 100 to 1 was during the pandemic, when it reached triple digits during the COVID-19 pandemic in March of 2020. It spiked to 124. So with gold trading at over 100 times the price of silver at the pandemic bottom, silver then launched into a sharp rally, and it surged like 140% within 4 or 5 months. And that right now it's down to about 91, as silver futures have touched $37 this morning. So follow through with a quarterly all-time high close above 37.50 later this month. That would open the door to $40 and a possible test of that all-time high at $50 later this year.
So that's what, 3 weeks out, give or take. And I think it's worth highlighting a couple of points you mentioned. The last time silver this high was what, 12, 13, 14, 15 years ago, and it didn't stay here for very long. It rapidly exploded, parabolic, up towards $50 per ounce. Silver has this reputation and history of, when it moves very quickly, it moves very violently. Are there any indications that it won't do so again this time?
Yeah, well, I mean, if you take a look at what's going on with the silver deficit, silver's been in deficit now. This is the fifth year in a row that silver's been in deficit, and it still needs to catch up to the gold price. That $50 was also reached. It was an artificial high reached in 1980, when the Hunt brothers attempted to corner the market. And then it hit $50 again, like we talked about in 2011. That was a huge cup, and now the handle now is looking like it's going to complete really soon. So that would be a huge cup and handle pattern, technical pattern, which is the most bullish technical pattern in technical analysis. And that would be the cup from 1980 to 2011, and then the handle from 2011 to now. That is huge, has huge implications. I mean, look what happened to the gold price when it broke out above a 13-year cup and handle pattern. It went from 2,100 to 3,500 in a matter of like 14, 15 months.
Now, imagine for many of our investors, what the silver price does is great, but they're more interested in how the stocks perform. We've seen the gold price set various records this year, and by and large, a lot of gold names, a lot of gold stocks have been sluggish to respond. So the question here then, David, is how have silver stocks responded to hitting that $36 per ounce?
Well, that's the key here, Paul. I mean, miners generally lead the metal they produce in both directions. And so before this breakout, the silver price had been coiling below that 13-year resistance at $35 an ounce, while higher risk silver miners and precious metals juniors were leading the metal higher. So the Friday before the silver breakout, the silver miner ETF SIL posted a multi-year closing high ahead of the metal, And this was a tell that this technically important, this long-term resistance, $35 in the silver price, was close to being cleared. And as silver blew through $35 last Thursday to the upside, the higher risk silver junior miner ETF, SILJ, that gapped up above multi-year resistance at $14 $14 with huge volume.
So it seems like that the timing is coming right for silver stocks. And looking at the chart,
Absolutely.
there's many today that are up sort of 5 to 10%. Many are pretty much at 52-week highs. So very encouraging for silver stocks.
Absolutely. Yes. I mean, I've loaded up with silver stocks in my portfolio that I share with my subscribers, and we're very happy right now.
I imagine so. Now, one silver stock that is looking to take advantage of this is America's Gold and Silver. It looks likely to benefit from higher silver prices after arranging a $100 million senior secured debt facility to fund growth and development capital spending at its Galena complex in Idaho in the United States. The company also entered into an offtake agreement with Ocean Partners for treatment of up to 100% of the concentrates to be produced from Galena. Under that agreement, Ocean Partners will also subscribe for 16.8 million shares in a private placement at 95 cents per share, a 14% premium. Total proceeds there, 16 million Canadian dollars. The company got a new CEO in late 2024, Paul Hewitt, and he's really driving a turnaround at the company. David, $100 million, that's a serious recapitalization. What does the company need that for? What does it need to fix?
Yeah, well, America's Gold and Silver is a turnaround story, Paul, and hiring Huey as their new CEO was a big step in the right direction. Before coming to USAS, Huey was CEO of Karora Resources, and they merged with West Gold to create one of the largest unhedged Australian mid-tier gold producers. Now, Huey was also CEO of Klondex Gold before the company was taken over by Hecla for a nice premium in 2018. Before starting my newsletter in April 2017, Klondex was one of my biggest gainers in 2016. So the company has strong potential due now to the 100% ownership of the Galena mine. This newly appointed CEO, Huey, and high leverage to silver prices. But Galena has a 170 million ounce silver resource at 400 grams per ton and a key antimony kicker. That mine produced 18 million pounds of antimony since 2001 and is expected to produce 2 million ounces of silver this year. The company expects to increase that total for the next few years, while costs are expected to decrease as they increase production. But before doing so, they required access to capital in order to review and update mineral resource estimates and the plans for a hoist shaft for operational upgrades and more surface exploration drilling at Galena. Now, also, the Cosala silver property in Mexico, that's their other major silver asset, that's expected to produce about 1 million ounces of silver this year, with an all-in sustaining cost expected to be near $20 from base metal credits. Now, this mine was expected to be low cost, but they lost money in 23 under former management, and they've been working on lowering costs down to $20 all in. Production is scheduled to begin next quarter, and in 2026, the company expects to produce 5 million ounces of silver and plans much more drilling to do this. So it's also important to mention that Cosala had roadblock problems from protesters in the past, and that adds risk in Mexico. And also, their company presentation that I looked at before we chatted here, it doesn't even mention their Relief Canyon gold mine in Nevada. So they might be attempting to monetize that.
Now, Hewitt or Huey is certainly a Mr. Fix-It, and this perhaps illustrates the importance of having a well-experienced, a higher profile CEO. He's obviously able to raise money. He's brought in a lot of money, and he's repeatedly at different companies set them on the right path. So having a good CEO or first-rate CEO does seem to be very much something that many companies need and many companies lack.
Absolutely. I mean, the previous management, they sold 40% of the Galena mine, and that's arguably their best asset, to Eric Sprott for just $25 million. And then they were forced to put Relief Canyon, which at the time they had recently purchased, on care and maintenance because of the high costs, at the same time as that Kasala mine was being blocked by protesters, and it crashed the share price. So hopefully, with the balance sheet fortified with another 45 million private placement last October, and this $100 million deal that you just mentioned, UA can get the company back on track. But the dilution required to fix the problems that he inherited has been costly. The company now has 29 million fully diluted shares outstanding. That October 50 million finance at 40 cents Canadian added 125 million shares with over 25% dilution. But with that being said, USAS still has that US Amex listing. And this is a big positive among peers with US OTCQX listings. So having a big board listing, US listing, makes this stock available to accumulate for investors to accumulate in their retirement accounts, for generalist funds to get into it, and for retail investors with Robinhood accounts.
Now, with so many shares outstanding, it seems feasible that perhaps in the future there will be a share rollback. And adding to your comment about having the US listing, Allied Gold just started trading on the New York Stock Exchange this morning. They expect a big jump in their liquidity because of that. Now, David, you mentioned that Eric Sprott formerly owned a 40% direct interest in Galena. Now, he's now vended that into shares of the company. So, as you say, completing America's Gold and Silver's ownership there. It sounds like that the fractionated ownership was part of the issue at Galena.
Oh, absolutely. Because like I said, it was their flagship asset, and they sold 40% of it. Sprott taking back shares to return full ownership to America's Gold and Silver. I mean, that speaks volumes regarding his faith in the serially successful QA running the company now.
Okay, another operation, another mining company that's experiencing or hopes to experience a turnaround is McEwen Mining. It's begun to develop the stock mine at its Fox complex in Timmins in Ontario, in Canada, and it said that will usher in a new chapter of growth by providing increased gold production at a lower cost than output from the Froome mine at the Fox complex. The stock deposit is royalty free, whereas Froome is, in the words of Chief Executive and Chief Owner Rob McEwen, what he calls an onerous metal stream that obligates us to sell 8% of our production at $605 per ounce. Great to see this come to an end. Rob McEwen hates royalties and streams, and the one on Froome has been a sea anchor on the company's performance, with the Fox complex having an all-in sustaining cost of over $2,500 per ounce in the March quarter. David, America's Gold and Silver, you said that's now a turnaround or rebound stock. Is McEwen Mining now a rebound stock now that the focus will be on stock rather than Froome?
Yes, it certainly appears so. Along with the market beginning to price in a $3,000 floor, the company's growth targets, they're supported by that recent financing through convertible bonds, and they've reduced borrowing costs, and this enables future production increases. So they also have the Gold Bar mine, as well as that Fox complex and the San Jose mine. And they all have significant upside potential for increased gold production by 2027. But as you mentioned, the company they're producing mines. They're really high cost, and they require that $3,000 solid $3,000 gold floor. After producing just 135 ounces of gold last year, this recent cash infusion gives the company an opportunity to basically turn its production trend upwards in the coming years. And their production is expected to increase to almost 200,000 gold equivalent ounces by 2027, and between 225 and 250,000 ounces by 2030. And remember, McEwen's goal for a long time has been for MUX to become the second listed gold miner on the S&P 500, along with the world's largest gold miner, Newmont. You have to be based in the U.S. to do this. And so this seemed like a pipe dream into 2024, but now it looks doable if the company can deliver on its plan going forward, along with the gold price remaining above $3,000 an ounce.
Now, David, as mentioned, Rob McEwen hates royalties and streams. As an investor, when you see a project or company with royalties and streams, are they a turn off for you? Do they provide you a confirmation that a project is robust because it's been vetted by a third party, or something else?
Well, that depends, Paul. Really, I mean, if the stream is if the streaming if the company's streaming the primary asset or a credit, in many streaming cases, streaming a credit makes sense to limit dilution to build the mine. But if the company decides to stream a portion of the primary asset, they must have a pretty good reason to do so for me to remain interested in the company or get interested in the company. For instance, JMJ Top 10 Junior, Skeena Gold and Silver. It's been in my top 10 list for a couple of years. They recently decided to stream a portion of its future gold sales as opposed to streaming the silver, which will be produced as a considerable byproduct of the high grade SK Creek Gold Silver Project in Golden Triangle. So with the upside for silver being much higher than gold on a percentage basis, I believe this was a good decision, because basically the 9.5 million ounces of silver expected to be produced annually in years 1 through 5 from SK Creek would be in the top quartile of primary silver mines. But as far as selling royalties is concerned, if a drill play sells a royalty on a flagship property before an economic study, this is a red flag to me, and it could be viewed as a sign of desperation. An ideal royalty sale would be to raise non-dilutive capital at or near the finance stage of a project for considerably more than an early stage sale would generate without an economic study. So, but nevertheless, I mean, these majors and mid-tier miners looking to add ounces via takeover, they view projects unencumbered by royalties as more attractive.
Well, one of the sort of trends, I suppose we could call it a trend that we're starting to see, is companies, miners and developers buying back royalties, or the amount of a royalty that they're contractually able to. A week or so ago, we saw Iron Gold buy back part of the Cote royalty. We've seen Arizona, Sonora, and Copper buy back part of the royalty there. So they're looking at paring back some of these royalties because they see there's significant economic upside for them in the future by doing so.
Absolutely. Makes sense. Yes. I mean, you want to build it into that contract that, hey, you have the option to buy back that royalty.
Okay, now another agreement reached last week. Taseko Mines, they reached an agreement with the, apologies for the pronunciation here, the Shakwatian First Nation in British Columbia in Canada, which was brokered by the provincial government, which provides a pathway for the New Prosperity Copper Gold project to move forward, however, not in Taseko's hands. New Prosperity contains 5.3 billion pounds of copper and 13.3 million ounces of gold and is one of the largest undeveloped copper projects in Canada. Under the agreement that ends years of litigation, Taseko will place a 22.5% equity interest in the New Prosperity claims into a trust that would transfer to the First Nation as and when and if it consents to a mineral development project in the area. Taseko retains a majority 77.5% interest, which it can divest. It also entered into a consent agreement with the First Nation, whereby no mineral exploration or development activity can proceed at New Prosperity without the free, prior, and informed consent of the First Nation. It also agreed that it would not be the operator for future exploration or development at New Prosperity, with the provincial government to pay Taseko $75 million for reaching the agreement. David, one of Canada's biggest copper deposits, now has a first step on the road to a potential future development. What's your view of what's happened here?
Oh, it's great. I mean, this has been a boondoggle for Taseko for a long time. If you take a look at the deal, it's the First Nation does not trust Taseko management to operate the mine, basically. But as a result, Taseko received 75 million bucks and retained 77.5% interest in New Prosperity. And after contributing the 22.5% equity interest to the trust in future for the Shikwatan Nation. I have a hard time with that pronunciation too. This is a great deal for the First Nation, while Taseko's upside for the project has been decreased, but the New Prosperity Project has been a huge what if for the company over the past decade. And now this 77.5% of a large potential gold copper mine is better than 100% of nothing. And judging, if you take a look at, bring up the 20-year monthly chart of TGB, the New Prosperity Project has been with it being in limbo for the past decade. That created a ceiling at 250 in the monthly price of the stock. I mean, it ran up there 4 or 5 times over the past decade. So, but when the news broke last week, this agreement finally being reached with the First Nation, the stock closed up 36% on the week and broke out strongly above this decade-long resistance at 250, which is now likely a strong floor in TGB. So, very positive news for the company.
Now, it's very interesting to see the provincial government, the BC government, getting involved, bringing the two sides together. As you say, there probably wasn't a great deal of love lost between them. The provincial government stepped in and mediated a settlement that appears to be good for both sides. Very encouraging to see the provincial government acting as an actor to bring people together and make things happen.
Absolutely. Yes. I mean, it's what we're starting to see is a lot of these First Nations are beginning to realize, hey, that it's in our best interest to let these mines be developed on our land, because we can benefit immensely from the profit and the opportunity to let them do so for jobs and everything. Absolutely.
For me, it's encouraging because I think in many jurisdictions, far too often the mining authority or the authority stands aside and leaves companies to their own devices to work out their relationships with the local communities and interest groups. When they should have a very active role to play in broken agreements, because
Mm-hmm.
by doing so, everybody benefits, and they are generally an authority figure that both parties trust. Now, with a line of sight on a potential development, who do you think could potentially take New Prosperity forward?
Who do I expect? I'm sorry, say that last question again.
Who do you think could potentially take New Prosperity forward? Obviously, it's not going to be Taseko. Who else?
Oh yeah, I mean, you could have a major come in there, and take over the and they could sell the project. Yeah, I mean, any one of mid tier majors or major mid tier miners or copper majors could come in and take that project forward.
Okay. Now, recently we had another announcement that involved a First Nation and opposition to a project, and that, of course, was the Resolution Copper Project in Arizona. However, the Aboriginal peoples there were unsuccessful in their attempt to block the project. Should we draw any parallels between that decision and this Taseko decision? One level, it does seem that Aboriginal peoples have more of a say in Canada than in the
Hmm.
US, or is that perhaps too much of an overreach, too much of a generalization?
Yeah, it's similar. I mean, the Resolution Project situation appears to be very similar, but the U.S. First Nation Apache stronghold, they don't want the mine built by anyone. They sued in 2021 to try to block what is expected to be one of the world's largest underground copper mines from being constructed by Rio Tinto. The Rio Tinto and BHP co-own it, and Rio Tinto would be operators at a place called Oak Flat, and it's located 70 miles from Phoenix. This is a sacred site's destruction would violate an 1852 treaty promising that the U.S. government would protect the land and its sacred rights. The proposed mining method is block caving, and that involves extracting ore from deep underground, and it causes the surface above to gradually collapse. And Oak Flat remains an active site for Apache religious events. So that is ongoing. I think the U.S. Forest Service is expected to reissue the environmental report, and that would potentially allow the land swap to proceed as early as the middle of this month.
Okay, thank you, David. Now let's end with a drill hit. Parametallic Mines intercepted 12.54 meters of 10.99% copper equivalent at the Lion Zone at its NISC project in Quebec. The company has received investment from none other than Robert Friedland, Rob McEwen, and Gina Reinhardt, some of the biggest mining investor names in the business. David, with shareholders like that, no pressure on CEO Terry Lynch to deliver.
Yeah, he's got a lot of pressure on him to deliver, and also, Lynch has also been calling for the reform of naked short selling via the advocacy group, Save Canadian Mining, that he founded with McEwen, Eric Sprott, Sean Roosen, and other notable sector professionals. Just before the junior sector entered a brutal bear market in 2013, the Canadian exchange regulators at IROC and CSA, they removed a trading rule known as the tick test in 2012. And that restricted short selling to neutral or sales to positive price changes at the time of the sale. So this group is calling on CSA and IROC to evaluate reinstituting the tick rule. And that would force short sellers to wait for an uptick in a stock before entering a short sale, a huge difference.
Now, David, as mentioned earlier in our conversation today, the gold price has broken many records this year. The silver price is now moving strongly upward, $36, $37 per ounce. I imagine that creates all kinds of stress and distress for short sellers.
Absolutely. Absolutely. So I don't think they're going to have to worry too much about short selling anymore. I mean, there's short selling is natural and it's healthy for the market. I agree with that. But being able to short on a downtick, that is a totally different story.
Now, let's get back to the drill hit I mentioned at the top of this segment. Why are people getting so excited about the Lion Zone at NISC? Power Metallic has been around for quite a while. It used to be called Power Nickel. Obviously, hitting coppers is renamed to change as it's changed focus. Why are people getting so excited about Lion Zone?
Well, it appears to be a significant discovery, Paul. I mean, it confirms a large potential area to drill for large polymetallic structures over the 5 kilometers there. And with 45 million bucks in the bank and 9 drills turning, the risk appears to be on the upside now for the stock. But if you take a look at the chart, the market sold the stock on the news. It's created a lower risk entry point for speculators, looks like to me.
Okay, that's all we have time for this week. David Erfle, thank you very much for joining us today.
Absolutely. Thanks again for having me, Paul. It's always great chatting with you.
Excellent. Now, of course, if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.